What we're going to do is pass them along. So if you grab one mic, and then there should be two others, and they can pass them on. Right. I'd like to introduce our moderator today, who is Priti Goklusing, who will be taking control of the next 45 minutes and leading us through this subject. So over to you, Priti.
Hello. Thank you very much. And thank you, everyone, for being here this afternoon. We've got a very interesting topic, which from attending some of the other sessions seems to have attracted quite a lot of interest. And I'm just very quickly going to go through the panel this afternoon. I'm going to start with CJ. CJ is the Chief Investment Officer of WWB Asset Management, a subsidiary of Women's World Banking, responsible for raising and investing private equity funds with a gender lens. Her company has invested in 16 financial services companies in emerging markets that offer financial products and services to underserved populations, especially women, including micro-enterprise and small business finance, agriculture and affordable housing loans, savings and payment services, vehicle finance, and microinsurance products. Prior to co-founding this company, CJ was the director of Women's World Banking Capital Markets Group. Next, we have Lisa, right next to her. She's the founder and managing director of Samata Capital, a fund management company dedicated to making private sector investments in small and growing businesses in emerging markets that advance opportunities for women and promote gender diversity. Lisa previously co-founded and was the Chief Investment Officer for Vested World, a venture fund focused on sub-Saharan Africa. And to the far right, we have Dorothy. Dorothy is a very interesting person because she's actually the end user of the investment which is being made in female-led African businesses. She has a passion to create a positive impact in people's lives, and she's an emerging futurist, sustainability enthusiast, certified coach, wife, and mother of 3. And she currently heads the Risk and Compliance Department at ICEA Lion Group, one of the largest financial services groups in East Africa with interest in insurance, investments, pensions, trusts, and properties. And she has most recently co-founded the African Women in Sustainable Finance Initiative, whose focus is to promote the role of women in the ESG and climate change space. Dorothy is a multiple awardee, with awards such as the Corporate Risk Manager of the Year for 2 consecutive years, as well as a finalist of the Thomson Reuters Innovation Awards 2018. In 2019, she was named one of the top 40 under 40 women in Kenya. Also, an African woman, we have Evelyn, who is the managing director of WIC Capital, the first investment fund in West Africa that exclusively targets women-led small and growing businesses. Evelyn's life mission is to contribute to the development of the African private sector by reinforcing and growing small businesses. She's passionate about gender issues in modern African societies. And last year, she was ranked in the Choiseul 100 Africa as one of the 200 young African leaders of 40 years old and below who will play a major role in the continent's economic development in the near future. She was also recognized on the Black Women in Asset Management 40 under 40 list of Black women who are shaping the future of asset management. And finally, we have Kunle, who of course is our only male member of the panel and who, very interestingly, has been investing in his role as the Director and Head of Client Advisory and Partnerships at Capricorn Investment Group, one of the largest mission-aligned investment firms in the world, and he has been investing quite a lot in female-led businesses. He spent over a decade at Goldman Sachs and has led several leadership roles within the firm's global markets division. And he's an active advisor and angel investor in several Pan-African tech-enabled ventures and works with some of the most active venture capital funds in Africa. Kunle has yesterday informed us that his recent investments constitute of 67% so far in women-led businesses. So I think that the panel will have both ends in terms of experience. We have the investors and we also have the end user here. And the first question that comes to mind when we think of African women, the perception in the rest of the world is very often that the African woman is still a woman wearing a wrap who has a baby on her back. And I think that has to change. And you are the people who are changing things in Africa. So tell us, what are the funding trends? What are the challenges that you have encountered in your enterprise in both sides of the table? So who would like to start? Shall we start with Kunle?
Oh, no, please, the ladies go first.
I'm happy to start from the perspective of we invest in the lenders who would potentially be investing in women-owned enterprises. We see a lot of challenges that span from traditional lenders who are lending to SMEs. They're often going to be looking for collateral. Women have less access to collateral. So for the bigger loans, they are at a disadvantage from that perspective. Another perspective that we certainly find at Women's World Banking is the lack of women loan officers who are actually taking credit decisions. The loan officer core tends to be heavily male-dominated when you're talking about SME lending. And there is an absolute correlation between the gender of the loan officer and the decision maker and the gender of the borrower to whom they're lending. So one of our calls to action is if you want to reach more women-owned enterprises, you need to employ more women as loan officers. And a final area that we're taking a look at is a lot of the fintechs now, they have alternative lending algorithms, and there can be a lot of bias built in those algorithms. So increasingly, we're trying to audit the algorithms themselves to remove the bias. But yeah, there's a lot of bias in the lending that we need to tackle.
So I'm going to speak from two perspectives. So I'll start with the opportunity side. I know you asked about challenges, but I just want to mention to you some of the changes that are happening in the African context in terms of trade. So while the rest of the world is almost disintegrating, Africa is coming together, and it has come into something called the African Continental Free Trade Area, AFCTA. Now, what does AFCTA mean? It's basically a major initiative, a highly ambitious initiative under the AU's plan on the Africa we want. And what it means, or what it aims to do, is to eliminate trade barriers across African nations. Now, one of the most interesting aspects about AFCTA is their focus on women. And why is this? It's because they actually recognize women as a key driver to trade within Africa. And from a number of research that has been done in the past, they have reported that about 70% of SMEs are owned by, 70% of informal workers or informal businesses are owned by women. And so AFCTA has a focus to actually ensure that these women are able to contribute towards the economy. And so what am I trying to say? I'm trying to say in terms of the opportunities, including the trade agreements that have been put in place. There's a major focus on women and of course youth, but today we are speaking about women. Now, just as Preeti you had mentioned, every time we think about the African woman, we think about, the child on the back and the wraparound and the headgear. But these women play a key role in the decisions that are made in the households. An African woman will decide whether to cut down trees to cook that evening, or whether they are going to invest in clean, clean cooking equipment. This African woman will also decide whether to plant a certain crop or whether to actually, chop down everything. So they actually play a major role from the household level. Now, wearing my hat as a fund manager through ICA Lion Group, we have been involved in a number of projects where we are looking at ESG. And the challenge that we faced is whenever we have conversations, whether it's with our peers, whether it's at board level, you also find very few women at the table. And so looking at those both aspects, both from the informal sector and also from the boardroom levels, knowing that women are also very long-term in nature, long-term visioned in nature, we realize that there's a big challenge in terms of ensuring that these women have the right voice, ensuring that there's an agency and a voice coming from these women to be able to make certain decisions at the boardroom. And it is for that reason that a number of us came together within the financial services sector in Kenya, and we set up the African Women in Sustainable Finance Initiative with very simple goals. One, to bring these ladies and women together in terms of making decisions when it comes to the boardroom or when it comes to the household. Secondly, access to finance, which a number of the panelists today are going to be talking about. As one of us has mentioned, it's very difficult to get finance when it comes to businesses, yet a heavy burden is on us to contribute towards, growth of the economy. So those are the challenges and opportunities.
Thank you very much, Dorothy. I'm going to let Kunle speak because he has a plane to catch. So Kunle, if you want to share with us what you think of the challenges which the women are facing.
Thank you, and I do have to apologize in advance. I have a hard stop at 3:30, but does anyone know the female population ratio from a world population standpoint? No? Close? It's a little under. 49.58. Can you tell me one industry or sector where female make up 49.58% of an ownership? Not a lot. You look at real estate, you look at finance, you look at just very generic businesses, and women don't even have that much stake. Yet, they make up 49.58% of the world's population. Logically, it doesn't make sense. When you think about inclusion, when you think about ensuring and empowering that women feel like they are part of society, it's imperative on everything that we do that we think about this ratio in that regard as well. From a personal standpoint, I've been angel investing in Africa for 4 years. I have 31 companies that I've invested in, and I use a three-pronged approach towards Africa. Female-led or co-led businesses. The business model needs to have an environmental or social measurable impact, and then value-based tech-enabled businesses. And then people tell me, you're not going to find any company that can do that. I have one in the room. Aisha, Farms to You. I invested in Aisha about over a year ago. I'm an advisor. I spend 30 minutes a week with Aisha for a year, every week, helping build her business. In that relationship building, it's given me a lot of insight into some of the psychological and societal obstacles that women face in being leaders or business owners in a male-dominated world. A perfect example was when we faced an issue, and we spoke about it, and I gave her a perspective. Here's what an aggressive businessman would do as a next step here. It was not in the playbook. But given her that perspective, give her a different approach, and then empowered her to think about it in a different way. A lot of people may ask, why is a man here? I think men have a role to play in this as well. Creating an environment where women can succeed, but also finding opportunities where you can help, coach, teach, advise, partner to help solve the problems that we're facing. Africa has long had societal issues and cultural norms where women just have been put in a certain box. We need to unlock that if we really want to build systems for the future that are inclusive, that are sustainable long term. So that's my perspective that I wanted to share, at least from a female approach. Not only is it additive that gender parity needs to be done, but it actually, for me, adds better risk governance when I'm investing. I was giving this example to someone. If you check all the African companies that were accused of fraud, 100% all male teams. Bro culture. Yeah, let's just get it done. Let's do it. But then when you have women as part of that governance structure, there's a little bit of a different element and a risk governance that gets added into management. And I think Africa does need that if we really want to build the next frontier market and really come out on top in the next 10, 20, 50 years from now. Thank you.
Thanks, Kunle. Thank you very much for that, Kunle. I will now let Lisa and Evelyn share their views.
Thank you for that point of view. So we as an investment club, then as a fund, we came together like after observing the tremendous gap in terms of financing, but in terms of also capacity and opportunities for women entrepreneurs to scale. We started our initiative in Senegal, in West Africa, where we have like 31% of entrepreneurs that are female, but that generally operate at a very small scale. And when they want to grow their businesses, that's where they face all the challenges in terms of access to finance, access to the right business networks, and also technical assistance. So our whole solution is really built around that. We provide adequate capital. So for us, it's going beyond that and providing equity, and equity as patient capital, intelligent capital, and also structures that allow for return from a fund manager point of view, but also take into account the reality of the entrepreneurs, of those female entrepreneurs who generally are not really open in giving out equity. But the fact that we are women investing in them and women locally rooted give them the confidence to just take us in. And in the way we structure, we kind of secure the exit towards them. So it is really something that's built around them, that gives a solution to their own problematics and responds to their needs. The second point on which we're acting is technical assistance. Because these are small businesses, and I'm not even sure it's an issue that only female entrepreneurs face in our markets, where the private sector is just nascent. Everything is to be built. We had a big challenge, which was investment readiness, of course, and we had to anticipate it. So for us, it was about building the right technical assistance program with a separate team and separate source of funding. And even at the fund management level, when we are fundraising, we also always anticipate a small envelope for investment readiness and then post-investment supports. And the whole idea is really giving the tools, the expertise that these business owners will need to take the opportunity of growth that is on the market, on these growing markets. So for example, we will provide like accounting services, legal tax, like basic services that small businesses don't necessarily have access to, strategic consulting, communication and marketing for quicker access to markets, HR as well, because these entrepreneurs are then growing their teams. In terms of TA, the networks of women that we have are also very important. These are all C-level women in Senegal and Côte d'Ivoire who have access to large networks and have a tremendous experience that they share as mentors, and also in the boards that they are sitting in, because when we invest, we set up the governance. And then lastly, like collaboration, we have partnerships with like international institutions on specific value chains, so that some technical expertise is brought on for free for these businesses. So I mentioned that challenge at the entrepreneur level. But as I said, we structured everything around that demand and around the markets, and we know that our strategy is working, given the growth of our portfolio. But then at the fund level, the challenge that we have faced was like really finding the right financial partners. Fundraising is tough. We are still fundraising while deploying because we are an open-ended structure. But we have been creative also with that. We realized we had access to donor money, so we incorporated it in the fund structure as first loss capital, which we are able to deploy, and that then we can use as arguments in our fundraising, because it is a new strategy. We are really responding to the needs of the market. We designed something, it's a small fund, it's a 20 million fund, because when we are doing the kind of tickets that we do, like 50,000 to 500,000 USD, you do not raise a 50 million fund, you raise a smaller fund. And this has been also a difficulty for us in terms of fundraising. But yes, we are keeping on it, and we believe that we will get there.
Thank you very much, Evelyn. Can I ask you to just now pass the mic to Lisa?
Oh, I think she's done.
Lisa, over to you.
Thank you. So I kind of want to do +1 to what everyone has already said on the panel, and pulse a little bit in that as well. First starting with what CJ was saying, I spent 8 years investing in financial institutions, many of which were microfinance institutions, and saw that same issue, where once you start going up in loan size, all the women kind of fall out of the portfolio. And it was this idea that, oh, well, women can't grow their businesses. No, there were other challenges that prevented women from being able to access this capital. But moving into more of the venture capital space, you can also see this much more broadly, where women just typically don't have the same access to products and services that are appropriate for their businesses across the board. And some of that, is just very rooted in bias. And it's interesting, Kunle was saying that, effectively what he was saying is that the amount of capital available for women, particularly in Africa, is disproportionate to the number of qualified businesses that are out there. The Big Deal put out some data last year that only 0.7% of all capital, and I think it was something like $288 million went into the venture space at that point in time last year. And then they put out another note this year that the first half, women actually went from 0.7% of all capital raised to less than 2% of all capital raised. And I'm just like, no, this is not something to really celebrate. We really need to be doing a better job. And it's the basis of what Samata Capital does. We're a gender lens fund in a similar way that Evelyn is, but we focus on slightly larger ticket sizes. We do focus on both gender diverse teams and female-led teams, because what we are really looking to do are build companies that have diverse, equitable, and inclusive cultures. Going back again to what Kunle was saying about risk mitigation, we really feel like these companies are going to outperform because they are mitigating risk much more readily with the diversity of thought at the table, but also identifying more opportunities. And so this is where we think these companies can really outperform, and it's really quite exciting. But I think I want to highlight one more thing, one more challenge and potential opportunity is the way to get more money to female-led companies is to get more money to female-led investment vehicle managers. And for those who are unaware, there are actually quite a number of them on the continent. So Evelyn and I both are part of a group called Advancing Women Investing, and there's other members who are in the audience here. There are over 80 of us that are focusing on businesses on the continent. Some are gender lens funds and some are not. But there are lots of challenges for us to be able to raise, partially because we're first-time fund managers, that checks the risk box, but also women are identifying how to get to companies in a different way. So with innovative structures, innovative products, which are new in the market and a little bit scary, but if you look at it a little bit more deeply, these are actually risk mitigating. And so I would just ask folks who are looking at investing in funds, investing in Africa, take a look at some of these new structures. There's some really exciting and great things out there, and just be open to be educated a little bit more.
Yep. Thank you so much, Lisa. I mean, the next question, because obviously we've seen a lot of the challenges. What, in your experience, leads to success stories? What are your living experiences? As you've mentioned, you have Aisha, who is here. What are the examples that you have where this has led to a snowball kind of effect, where you've attracted women to you to get that investment and it's working well?
I'll start because I probably have to leave now. And I'll keep it very brief, but I think I still hammer on the point of the snowball effect for me is that when I started doing a lot of the angel work I was doing, it was a little more of a spray and pray approach, right? Just trying to do everything as much as I can to, get my tentacles on ground. But I think as I started working with a lot of female founders, just learning from them, how they think about risk, educated me on how to fine-tune the criteria that I use during my due diligence process, and to factoring a lot of the things that, when we think about impact reporting, everyone's focused on the downstream and the metrics and the reporting that you need to get. How do I take all of that and put it up front in the actual investment process where it's integrated so that the reporting is just a natural output of something I've already done up front? And so that's what I was able to do to be able to fine-tune to get to these criteria that I use at the moment, was learning from these female founders how to think about it, because I have my own perspective of how I think about it, but engaging them, challenging them, and them challenging me helped redefine and fine-tune my thought process in how I want to be able to invest on the continent as well. It's been an amazing journey for me, one that I'm very grateful for, but has also extended into my day job of how I think about risk in that regard as well. Capricorn is a $10 billion outsourced CIO mission-aligned firm. And we manage or originated by starting to manage capital for Jeff Skoll, who was the first president of eBay and made his wealth through eBay IPO. One of the things that the Skoll Foundation is really focused on this year and next year is really focusing on gender lens investing. And in my day job, I have the opportunity to work on a framework for the Skoll Foundation that we can use to invest in female fund managers. But what does that help me do? It helps me think about that in an Africa context. And I think me being a Capricorn has really exposed a lot of that exposure into emerging markets and in Africa. And the long-term goal for me is that we do start an Africa program where we use all the things that we've learned over our 2 decades of investing and really channel it into things that we know align with our mission, but also align with making money, but making sort of an inclusive environment where everyone makes money as well.
I just wanted to pick onto something, Kunle has said about making money. Many times, when as women we go to banks or financiers and we're looking for money, we are not looking for, pink, fluffy, nice-looking products. We actually want to make money, and we have the skills and capabilities to do that. So I think a missing angle most of the time, and when you come to the African context, financial institutions tend to assume that these women are looking for favors, or they're looking for really, low-priced products, or not very good products just to get them along. But we are looking for mentorship, we are looking for advisory support, we are looking for products that can drive us to the next level, which are not necessarily fluffy, as may be presumed because we are women. And so even as investors are structuring and the financiers who are working on availing these financial solutions to women, it's important to think about the end game, the money factor. We actually want to run successful businesses.
From our perspective, there's, so because we invest in financial institutions and we look at their data every year and gender disaggregate it, over 10 years that we've been investing to date, we can definitely point to some trends. Women do tend to be better repayers. We see that all the time, and across different product categories. Women tend to be, have higher retention rates as well. So that's quite important for a financial institution to understand. These are valuable customers. They're less likely to go to the lowest bidder if you acquire a woman customer, you're likely to hold on to her. You're also likely to cross-sell to her, much more so than to a man. And that's important to know. The one thing is the act of acquiring that woman customer might take a little bit more effort because they are risk averse, they're relationship driven. So often you would have to visit a woman 2 or 3 times to gain her trust and actually sign her up as a client. But those dynamics need to be understood. The other thing we see is, despite the fact they're better repayers, they do tend to get smaller loan sizes. So if they are getting lent to, they're getting lent smaller sizes. And that may not make sense considering their better credit risks. So those are the key performance metrics that institutions should understand about women-owned businesses. They are very good clients, and they're worth finding and investing in.
I want to pick up on something that CJ just said. And you guys have the data. In the sense of sometimes women are more risk averse, certainly. I think in the space that we're in with high growth scalable companies, women get painted with this idea that they're more risk averse and so they're not going to scale as fast. But what we have found, and actually let me cite a piece of research, and granted, this is US European data, but I'm going to give some anecdotal evidence for Africa that for every dollar a female entrepreneur was received as investment, they actually made 2 times the revenue of a male entrepreneur. And what we're seeing on our side is that it could be that you classify women as more risk averse, but actually I would say they're more risk aware. And so you have to think about it in a very different context. And so for us, what we're seeing is that our female entrepreneurs are driving towards profitability faster. And part of that, we think, anecdotally of course, is because in their minds they know they have it's much harder for them to raise, they will raise lower amounts, and so they have to use that money as best as they possibly can, as efficiently as they possibly can to get to profitability, so that they can show that next investor, no, see what we did, and we are really good at this. And maybe if you've gotten to profitability, you don't need to get that next investor quite as quickly. So that's what we're seeing on that side.
I totally agree with that, and my experience is totally in line. Just an anecdote, I have been investing in Senegal for 5 years before we launched WIC Capital, and I was in another local SME fund with quite larger tickets. Our minimum tickets was then 500,000 USD, and in 5 years we never invested in a women-led or even mixed team, diverse team. And I think if you ask me then, I would say we do not see women in this space, in the SME space, that are investment ready. And since launching WIC Capital, I have personally learned so much. Number one is that women tend to go to women to raise capital, like they feel more confidence. And they tell us that we come to you because you are weak. And even in my team, I have male investment officers. Some entrepreneurs will say, we prefer to talk to a female investment officer or to you. So this is one very important, and it's a link I make also to the importance of investing in female-led funds. And one thing also that's very, very satisfying when I compare the 2 experiences investing in SMEs in Senegal is the growth, the rapid growth, and also the impact. Like for a smaller ticket, you are able to have like multiplication of revenue and net income, and more jobs, and like more permanent sustainable jobs. Like we have done investment of 1.5 million just to generate 75 jobs by one SME, when you can do like a $200,000 ticket and get 25, 50. Today, so far, we are just starting. We invested directly 1.6 million USD, and we syndicated those investments so that like the 7 businesses that we have invested in actually raised 3.6 million, and we are going on 3,000 jobs, because we have some outliers, like one business in the care economy, another one that links the local producers to international markets. But yeah, globally, in terms of job creation, it's so satisfying because women entrepreneurs always tend to want to impact. And while they are generating profit. Profit is always key because it's about sustainability, but one thing that's really constant is the willingness and the commitment to have a positive impact on environment, on their society. So yeah, and in terms of growth of your revenue, like just to give you a number, in less than 12 months, they're able to just multiply by 4 their revenue and move from like this very small business that they were in terms of classification locally to a mid-sized SME. And yeah, we are really, really happy for that because this is really what we are looking for. We are looking for scale and just to get out of the traditional view of women entrepreneurs being very, very small businesses. The idea is really to scale them just for an accelerated growth of the country and of the continent.
Thank you very much. And I think the takeaway from what you've shared is that there is a lot being done. Would you say the model is adapted for the future? And how do you see that developing? How do you see the situation evolving in the various parts? And particularly from your perspective, Dorothy, as well, you know, on the receiving end of that, what do you think is required to happen? What do we need more of? What do we need less of? So if you want to start.
Yeah, so there are multiple factors. So I'll start from, you know, sometimes we forget a key stakeholder, government. Still key stakeholders, even where you have, you know, investors coming on board, because they drive a lot of policy support that actually lead to successful women-run businesses. So you find government could either, you know, their policies could either be gender negative, whereby now they enforce policies that make it even more difficult for women to operate, or they may just be gender neutral. So, you know, with that, there's really no clear focus. So I think an element that we forget about those key stakeholders in terms of how do you, either as investors or even those who are doing capacity building, technical assistance, bring in, you know, the government, because the governments actually play a key role in ensuring an enabling environment. And then one of the other aspects that would make things better would be in terms of, again, advisory support. Like, you know, you said that women come to you because they are more confident, you know, they're speaking to a fellow woman. But most of the time, we know we are talking about all these funds being available, but not too many women know about them, you know. And the ones that they know about are the big banks or the big, you know, really big fund managers. And when there are these big banks, women, we tend to feel we can't access, it's inaccessible, it's too far out there. And so just bringing the conversation closer to the ground, I think would yield more, possibly not in terms of sizes, but in terms of the volumes. And in Africa, you need volumes to drive an economy.
Yeah, we have touched on that several times. I think what we need is more money into that space, in the space of SGBs on the continent, specifically women-led ones. There needs to be more intentionality at the fund-of-fund level, because everyone speaks about genderless investing, accessing women, but the reality is that women-led businesses are very small businesses on the continent. So if you want to invest in them, you have to go through intermediaries that are also intentional and that are setting up the right tools in terms of instruments, in terms of technical assistance to get there. And you won't be disappointed because the results are there. And I can't wait for us to have our first exits and just to be able to show, like to substantiate the kind of returns that are really possible on that.
I'll just add, obviously, I mean, more capital. I think we all agree on the more capital part. But also more appropriately structured capital and a whole diversity of capital as well. I mean, that's just for the entire continent for any business, but particularly for female-led businesses as well, and not have the hurdles for women to be able to access that capital. Access to markets is another big thing. So being able to get the licensing, to be able to export your products more, or, you know, in a better way. and not having government hurdles in place to do that. And then also what you were saying, Dorothy, as well, access to capacity building, but affordable capacity building services in a very large spectrum, both by industry and geography. Right now, yeah, you can probably find someone to help you on the capacity building side if you're sitting in Nairobi, if you're sitting in Lagos. But even if you're sitting in Mombasa, right, it's hard to find. Or if you're further out, or if you're in another one of the countries which doesn't have a large entrepreneurial ecosystem, it can be quite hard. And you tend to find either someone who's really good and expensive, or pretty useless. And so having a better access to a broader spectrum of capacity building is also very needed. I think I just also want to double down again on just more capital into gender diverse fund managers or investment capital managers and female-led managers as well, because women do tend to invest in other women at a rate of 2 times men. And so if you really want to make sure that female-led businesses are getting capital, that's one easy way to do it.
Not much to add to these really important points about regulation, mentorship, access to resources. And I was just going to double down on your last point, Lisa. You know, money and investing is a value chain. And we need women in that value chain up and down, not tokens, but a lot of women. We need women angels, we need women in venture, we need women in private equity, we need women running banks, we need women loan officers. We've got to be in all parts of the value chain to make sure it's working for women as well.
Thank you very much. I will leave the audience to ask their questions, and I can see a lot of raised hands.
Trying to talk there. Hiya. Lisa, please, I'd like to ask you to expand further on why backing female entrepreneurs work. You mentioned finding other opportunities. So we heard about the risk mitigation and being better loan repairs, but that point particularly would be great to expand on.
Okay, so on the finding opportunities part, essentially, women, as Kunle had said, make up 49.5%. I actually thought we were more than half. I thought we were 51%. I'm just saying. But we're at least 50% of the population. We're at least 51% of the population. But if you look at the statistics on who actually has the purchasing power, who puts money out the door, it's largely women. So I think that's number, and I haven't looked at it recently, but it's definitely over 60%. And so if you aren't targeting women with your products and services, is it 70? It's 70. There we go. So if you aren't targeting women with your products and services because you don't think women have the money or they're not a good, customer to sell to, then you are missing out on an opportunity. And so if you start to actually change or redesign your products and services so they're for women, and I'm not talking about pink washing. I'm not talking about taking the exact same product and coloring it pink and putting it back on the shelf. I mean actually designing products and services. And let me give you an example of what I mean. We are investing in an electric vehicle company in Ghana right now. We want to make sure that that car is just as safe for women as it is for men. Up until, I think it was the 1980s or 90s, I'm going to get this statistic a little bit wrong, but women and children had a much higher mortality rate in car accidents because all crash test dummies were men. And so if you're not putting those kinds of things into your design because you don't have that diversity of thought at your table, either in your management team or on your board, then you are not designing products and services for women, and you're not tapping into that opportunity. So that's what I mean. I think they but they recognize these kinds of opportunities that we're talking about now, right? Which, and male entrepreneurs have recognized tons of opportunities up to this point, absolutely, but very often they're missing this piece because it doesn't apply to their life.
Hi, my name is Madupe. I'm a co-founder of a fintech startup. We're in pre-seed. So a question for you guys, anyone can take it. Do you think that women-led companies need more help at pre-seed? And how many of your funds support pre-seed versus growth?
What do you mean by more help?
More investment. So what I tend to find is at pre-seed, there are less and less VCs within that space. Do you find that as women entrepreneurs and the challenges you've talked about, that actually that's where the help is most needed? That's where people need to back them rather than at growth. Because one of you mentioned that women are driven to make money, like to become profitable in time. So it's easy to fund anybody or to back anybody once you start seeing profitability. So that's my question. And how many of you back women-led businesses at pre-seed stage?
I can start by saying, this goes back to my value chain point. Women are at a disadvantage at every stage. It starts at pre-seed, because pre-seed is often family and friends. And who are your family and friends? But probably more women than men. And who has the money? Probably more men than women. So it starts already at the networks that you're operating in. You're just going to have to, unfortunately, work harder at every stage to find your backers, because it's not naturally set up yet for people to find your businesses.
We do not do pre-seed, so
I know. I don't do pre-seed either, but I'm going to still answer the question. So we don't do pre-seed either, right? But I want to give a slight bit more hope in that we're seeing more angel groups out there that are all women, right? You guys started out as an all-women angel group. And so what market are you in? No, which geography? No, which country? Keep going. Sorry?
11 markets in Africa.
Okay. I was going to give a specific example, right? So Rising Tide is sitting in Lagos making these kinds of investments in female-led companies. And you do have some of these other more female-driven angel groups that are doing this kind of work, and they're coming up in various markets, and I would say that's a better bet. Unfortunately, I have to agree with CJ that it's really, really hard, and part of it does go back to women tend to not have as much capital. They have to use it for other things than what men do, and in some cases, yes, women are more risk averse because this has not been something that has been open to them, that they've been educated about. But we're seeing more and more of it. I'm actually super impressed by the angel groups that I see in Africa related to this.
Are you involved with an accelerator at all? That's the other place to get funding.
Yes, I am actually an accelerator. But what I've found is there just aren't many pre-seed VCs. Yeah. And where they are, they do not back women-led businesses. So if there are female VCs here, the question is, should you guys not be pre-seed versus growth? Because anyway, that's not growth.
Come see me after. I know some other people.
Okay.
And if you are in a francophone market, you should look into Digital Africa, an initiative by Propaco they just launched. They might be able to help you. I know there will be more intentionality about reaching women in the tech ecosystem in Africa, so you should have some initiatives in the coming months or years.
Thank you. I just have a quick question. I was sitting here and I'm from Express Credit, and we are a microfinance company operating in South Africa. And I think the question is more towards, looking at the future and assessing the potential of women's rights, and it's specific to new businesses in 10 years from now. What decisions do you need to make today to change that stats in 10 years' time? And sitting here as a financing company looking at opportunities in the markets where I operate in, is like Namibia and Botswana and those markets. The question I'm having is in terms of if funders have to allocate funding and understanding that the decision of a woman or a child sitting at grade 1 will be the leader making decisions in 10 or 15 years from now. Isn't then the point of tailoring a solution looking at parents that's supporting their children to be in those roles in 10 years from now? Do you assessing that stats and understanding financing companies, what do we need to do to have a solution in the market that looked at education, Because you need to prove that that woman can make a decision in 15 years now to run a business and to be educated. And I think that the tailoring solution is, for me, that providing financing to employers or people that is employed is that if I can find financing that can actually be affordable to be lended onwards so that children have a future and have the belief, and specifically a girl sitting in grade 1, being a future leader, what is your views in terms of advising me and getting those funds to a market in Africa and deploying it for the right purpose to assess the stats in 10 years from now? Thanks.
Can you repeat the question?
I want to know, so, yeah, it is for you, Christina. I think the question is, if you need to allocate funding to a company that deploys into markets, I'm not talking about an SME specific, but what is your thinking about educational products, or how do you deploy that money to be successful for young persons that need to be employed or look for a future in the future, yeah?
I mean, so school fees, sending kids to school is one of the key priorities for mothers, which is, another reason women often have control of those decisions, but the more the woman controls the financial decisions, the more children are going to go to school. I work I'm investing in financial institutions, those that provide specific education finance loans. That's a growing market, and something that I'm very focused on is a household that gets a loan may only send the boy children to school still. So I do think it's very important, and I'm trying to make sure that any education finance loans are structured so that there would be a break if it's the girl children being sent, or at least a break if all children are being sent. I mean, that's where it starts. And then I think girls have to be in school, but girls specifically have to be encouraged into the STEM fields from a very young age, because we need more women in fintech, we need more women in money, and so they should be encouraged specifically in those fields as well. Are we at time?
Oh, okay. I'll just add one other thing here, is that I think it's a multi-pronged approach, right? It's not just investing in a particular company or a particular education product. You have exactly what CJ was saying at the end here. You need to, in some cases, change the culture so more women go into STEM and are in financial services and their hurdles aren't put up later on in their careers to say, no, you can only go this far. But I wanted to turn to you ladies to be like, what do you guys think should change on your continent?
Oh, no time. We're being told no time, so let's meet after.
Thank you, everyone.
Thank you very much indeed. Thank you very much indeed. I think it was a very, very interesting panel discussion. It did go over time, but we probably could have gone twice as long. But thank you very much indeed. Thank you.